All right, morning everyone. Welcome to another episode of the Bitcoin Brief with your host Tone Vays, joined by the one and only Jimmy Song on this Friday the 13th of 2020. Can it get any worse? Like, fuck.
Maybe two wrongs make a right this time, and we have like the best day ever. I don't know. Like it's gotta gotta have some compounding effect. Like, it can't always just go negative. Hopefully, it's multiplicative, not additive.
Yeah, it's I mean, this year has just been out of control. It's like, you can't even describe it. I mean, hopefully in like
Don't
10
don't
years.
don't say that because it's not over.
I
We got
know.
we got we got
We don't even know
another
who the
45,
president
50
is.
days to go.
We don't even know who the president of the United States is. That's how crazy 2020 has been. Anyway, we're not going to talk politics today. We're going to go right into crypto, and let's go from there. Unless Jimmy, you know what? I'm going to host Christine. We're going to have another host here next week. We're going to try out some new hosts. But otherwise, Jimmy, how is life in Texas?
Well, life in Texas is, I think, similar to life everywhere else. We're just all kind of frustrated. How is it possible that a year ago we didn't think it was normal to, meet each other with masks and, constantly not see family and things like that? It's just so crazy how far we've come in a year.
No, it's crazy. So Thanksgiving is coming up, Christmas and New Year's soon after, and just think about your last holidays with your family on Thanksgiving or Christmas, and imagine if someone at that table said, next year you can actually get in legal trouble by celebrating Thanksgiving or Christmas with your family.
That's totally on the table right now, which is really scary. Oh gosh, yeah.
All right. Anyway, let's go to screen share and let's talk about crypto. And I absolutely love the picture that they're using in this headline. And the reason is the moment I saw this, and this is of course talking about the Ethereum hard fork that happened by accident, kinda, sorta. We're gonna discuss it. But I love this picture because here's a screenshot of one of my podcasts, the Bitcoin Law Review, when it was myself and one of the lawyers trying to explain to Richard Hart why he's building a scam, even though he knows it's a scam. And that was him explaining why Hex is not a scam. So that's an actual, somebody took this screenshot during the podcast at the 3-hour mark of a 6-hour video of Richard Hart trying to explain Hex to people that understand blockchains. So let's talk about this Ethereum situation. So Ethereum's unannounced hard fork was trying to prevent the very disruption it caused. A couple of highlights. The bulk of Ethereum's DeFi ecosystem went dark earlier today after the latest bug in the Ethereum code split the network transaction history in two. The split resulted from a code change that was surreptitiously inserted into the previous GIF update. Some Ethereum node operators ignored the update, which ironically was meant to prevent the very split that occurred. The nodes that did upgrade were under the impression the update was minor and did not know it could include a change to Ethereum's consensus design. That's beautiful. A post-mortem released today by GIF indicates that the bug was intentionally triggered. That's great. The case is perhaps Ethereum's greatest challenge since the 2016 DAO fork, and it raises questions about Ethereum's off-touch decentralization and the effectiveness of its developers coordinating going into Ethereum 2.0. So here are, nope, that is us. We don't need that. So here are some additional details on what happened. Let me just throw in a little bit of a comment. Just like with the election, I don't want to talk about the election, but just like when people say, well, the difference this year is no different than the difference in 2016. And a lot of the Ethereum defenders are now saying, well, this is no different than the Bitcoin fork of 2013 introduced by Mike Hearn. No. This is not like that. This is actually nothing like that. And the I guess the defenders that made this change are saying, well, we couldn't make the change public because then someone could have exploited it. And clearly they didn't have enough control of the ecosystem to have that red phone to call the right companies to let them know, to make sure that they update in secret and don't tell anyone. But Jimmy, give us a more technical take on this, and then the political take, because clearly no matter how many times this show has stated that Ethereum is a centralized database and you might as well use Google spreadsheets, no one's listening.
Yeah, so they were trying to do some sort of unannounced hard fork. It turns out the thing about Ethereum is it has multiple clients, and they're not in sync with each other, or it's hard to keep them in sync because they're hard forking all the time. But this was an unannounced hard fork, which is really, really bad because that in essence causes a split. If I read this correctly, there's a particular type of smart contract / transaction which one set of clients will accept and other will not, and that's kind of what triggered this consensus upgrade. Consensus failure. Because all those nodes that are running on Infura, which is off of AWS basically, didn't upgrade, but you know, some others did. So they kind of got into a giant mess. The thing about Ethereum is that it's supposed to not really have consensus failure because they have something called uncles. So if you have multiple you know, miners that find the same block, then you're supposed to reward one of them less, but continue on the same chain and so on. Instead, you had like a complete hard fork where you have two branches go on for a while. They're likening it to the 2013 thing, but that was actually a soft fork, and we were able to go through and you know, favor the chain that wasn't like sort of forking against itself. So in a sense, like it's very, very different, and this is what happens when you have piss poor engineering, which is what these guys did. There's a post by Greg Maxwell which is pretty instructive about like how Bitcoin does things, or what Ethereum should have done, which is essentially put it into the client without actually activating it. And then like announce it, and then like make sure everyone's upgraded, then announce it, and then you wouldn't have that problem. Instead, they just sort of stealthily tried to upgrade one portion of the network. And I don't know if anyone managed to double spend or anything like that, but it's a pretty bad failure. And I would say, yeah, like it's in a sense like worse than the DAO, because at least with the DAO, it was like consistent rules. But with this, it's just, you know, you caused a mess everywhere, and Ethereum was unusable during the time that it was split.
But I don't see, I mean, maybe I'm starting to pay attention to the shitcoins less and less. It actually bothers me that people like yourself have to spend time understanding Ethereum when you know that it's useless. And the same thing goes for so many other blockchain engineers. So I'm starting to completely ignore it. But it looks like half the people don't care because they know Ethereum is garbage, and the other half are going to defend Ethereum till the very end. Like, I don't know, I guess there's a few people still defending, I don't know, BitShares or some other nonsense that Dan Larimer created. I mean, you defend it till the end, and you're like, just like Roger, we're going to get to BCash in a second, but like, at what point, like at what price point does BCash have to get to in order for Roger to throw in the towel? Because that's really the only metric. In Ethereum, I don't know if price is a metric, because even the Ethereum people understand that ETH is not money. Most of them, I think the majority of the ETH people understand that it's not money. Some of them are treating it as an investment, but no one has ever claimed that Ethereum is going to replace money. At least they're kind of understand that part, maybe because there's going to be trillions and trillions of Ethereum. There's really no scarcity there, and it doesn't really need it. But anyway, like, it looks like no one really cares, especially not the government entities that still think Ethereum is decentralized, and all of the Ethereum promoters that are trying to get government to build Ethereum infrastructure or build infrastructure reliant on Ethereum. Well, like, nobody cares. Like, are some of the Ethereum people realizing how bad this is for their decentralization? I have an article on decentralization. People are welcome to read it. Just go to the blog. It's the last thing I wrote. And I'm not even a technical guy. And I explained why Ethereum is not decentralized. It's down there in like the Ethereum section somewhere. Anyway, I'm going to digress here and leave it unless Jimmy has additional comments before we move on to the incredible world of DeFi and how well they're doing.
Yeah. So, I mean, just with respect to Ethereum, it's crazy that the price of Ethereum went up after this news, right? Like that to me, it tells me exactly what you said, which is that everyone that knows it's a piece of crap doesn't care. They don't own it. They're not going to be selling. And everyone else, they already own it, and they're not being shaken off of Ethereum because they've held through a significant downturn in Ethereum. I mean, it's been a few years since they've been going up in price relative to Bitcoin. Like they've been on a downtrend for a very long time. So they're sort of like bag holders that are still in denial. But that said, Ethereum is very fragile, and we just saw that. If it continues that way, then I suspect that there will be a reckoning. And some of these institutional guys, some of these hedge funds and so on that have Ethereum in their portfolio, once they start dumping, I mean, it could get bad real fast.
Well, yeah, and very soon we're gonna get to another altcoin that is starting to get really bad really fast. But anyway, let's briefly mention DeFi now that it's hitting the mainstream media, aka Bloomberg. The biggest casualty of the current Bitcoin renaissance, the current, well, DeFi, I don't like how this article started. Cryptocurrencies linked decentralized finance applications, the favorite darling of the digital money crowd this summer. I'm just going to read the highlighted part. The DeFi Pulse Index, can't believe such a thing exists, tracks performance of 12 DeFi coins, is down about 26% since it was created on September 9th. Now, during that time, Bitcoin was up about 50%. So Bitcoin's going up. DeFi is going down. I'm not sure if DeFi has been added to the... I mean, this is basically since September. Since early September, Bitcoin dominance has gained right there about 12%. And I know it's not much, but it was the DeFi sucking a lot of the stupid out of the crypto space. And if it wasn't for this DeFi insanity, I'm sure I would have been right that Bitcoin would be 80% of dominance, and I'm sure it still will be. Just some specifics on a couple of beautiful DeFi projects. Here is one. Due to an error in the interest rate model update, I guess they updated their interest rate model, which we conducted earlier today. The USDCW, the wrapped Bitcoin, I don't know, some stable coin, and Ethereum markets are frozen. You cannot supply, borrow, repay, or withdraw from them at the moment. This is, of course, your average day in DeFi land. This will not change because the people writing your interest rates model probably never even have taken high school economics. This is the world of DeFi. Jimmy, any additional thoughts?
Yeah, I mean, this is a copycat of Compound, and basically they managed to screw copying Compound and essentially locked up a ton of money. I think it was over $10 million or something like that worth of assets. And yeah, this is what happens when you invest in crap like this that doesn't do nearly enough audits or understand anything, and it's just a pump and dump scheme because they don't care about the tech at all. And DeFi has had this giant crash since the summer for that reason, because Like they were going on about how this is like changing traditional finance, and you know, it's going to make a huge difference and all this other stuff, and then it just crashes like 99% on like all sorts of stuff and causes the fees on Ethereum to spike like crazy. Yeah, I mean, like Ethereum is basically a platform for scams, and when you run when the scams are found out for what it is, then it starts going downhill again. And you know, it's weird because a lot of these DeFi coins are like sort of going up and then down and then up a little bit and then down again. It just like draws people in for a little bit and then it'll crash again. Like there are these pumps where the holders are getting to dump or something. It's just a really weird thing right now.
Yeah, so does this also mean that they managed to lock up 27.8 Bitcoin? So thank you for locking up. What is that? Almost.
That's a wrap Bitcoin, and I believe the custodian for that is BitGo. So the way it works is that BitGo has access to these, and but like on Ethereum, it basically is transferred on Ethereum. And I believe like they might have even called up BitGo and said, "Hey, can you release these to us?" And they're like, "No, it's based on the rules of the Ethereum blockchain, and if you don't you know, sign a particular type of transaction, then you don't get it." And that's I think, yeah, who knows how that'll play out, but that's
so BitGo has access, but they won't give it to them because they can't prove that they own it.
something like that. It's like they knew what they were signing up for when they did this. It looks like it's like quote unquote permanently lost, but it's not really permanent because BitGo has access to the actual Bitcoin. On Ethereum, the wrap Bitcoins are kind of lost, but yeah, I mean, it brings up a whole
this is
host
going
of
to be
issues.
great. So so wait, isn't BitGo being bought by like PayPal, or at least that's the rumor?
That's the rumor, is that they're looking into it, or they're doing their due diligence.
So this is going to be great. One of these days, if the Lost Show ever comes back, so BitGo has access to the underlying Bitcoin, but because these nimwits screwed up the contracts, no one can actually access the underlying Bitcoin. So sooner or later, someone is going to try to sue for the underlying Bitcoin that BitGo is holding.
Yeah, so something like that. I mean, that's gonna be that's almost worth like $500,000 already. So
right.
You know, who knows? Like next bull market, that might be worth a few $1 million.
So please, so can someone please explain to me the decentralization in this process?
There isn't, and it's always been theater, and it's never been reality. No, it's a marketing.
I absolutely love this example. This is a perfect example of where the only advantage to having decentralization, or in our case, to our show, the only advantage to Jimmy and I of this being considered decentralized is it gives you the ability to fuck this up in a way that it can only hurt you with absolutely zero benefit.
Yeah, basically, you're taking on lots of risk without much reward. I guess the reward is getting to run a scam, but that's. You know.
So look, the entire value add of decentralization in this project is the ability to make an update to your interest rate model, and then not have the ability to prove to the custodian that you own the actual asset. That is your only value add of DeFi. This is awesome. I can't wait to use this as an example in my panels on DeFi. All right, speaking of one more DeFi project, only because I love the name, the Harvest Finance token has plummeted 65% after attack SAP's DeFi site. So I just love how it starts off. A possible exploit in decentralized finance protocol Harvest has sent the platform's native token farm tumbling 65% in less than an hour, according to CoinGecko. I don't even care what caused it. I don't understand why these tokens are worth hundreds of thousands of dollars. Maybe that's the market cap. Some of these tokens are worth $20,000. Reminds me of 42 coin that's currently worth like $80,000 a coin because there's only 42 of them. But the liquidity per day is like $8. Anyway, unless Jimmy, unless you're intimately familiar with the Harvest Finance token, we can move on.
Nah, I mean, I could talk about how terrible DeFi or any of these like smart contracts are, but you guys all know that.
All right, so from one fork to another, let's move on to what's about to happen with BCash in a couple of days. Today's Friday the 13th. This article is from November 12th and just yesterday. And the fork is coming on Monday?
15th,
Sunday.
Yep.
Okay, maybe we'll stream. It is a bit of a comedy show, so it'll be great. I'm just going to read this part. This latest hard fork, which by the way, no one seems to give a shit about, this latest hard fork comes as one internal group is trying to push its own implementation of BCH, the Bitcoin Cash node, BCHN, to win out over the long-running Bitcoin ABC protocol. Bitcoin ABC wants to force miners to give 8% of newly minted BCH to a developer treasury, which is controlled by Marissa Shea, and the same individual who created the new rule. So here is like the mental confusion of it. We have BCH, which is goes by the name BCash, and the main protocol of BCH is Bitcoin ABC, even though when BCH started, Roger was out there talking about how great it is to have 5 implementations of your protocol. Now it's pretty much Bitcoin ABC, to my understanding, which is controlled by Marissa Shea, who decided to make a consensus change in order to pay himself 8%. Now, Roger at first was for this, but then was against it. And by being against it, Roger's camp is now trying to say, no, don't add the change. We're going to stick to the old rules, which we are renaming Bitcoin Cash Node BCHN. So this is beyond confusing. Everyone is assuming BCHN will win. But as we know from forks, you don't need 80 to 90% of the hash power to win a fork battle. You need the more dedicated, the more diehard, the more pure community to win a fork battle. And it doesn't matter your mining. So what say you, Jimmy? What do you think is going to happen?
Yeah, you bring up a really good point. So the way that Amory created this was as a soft fork. So they've been doing hard forks all over the place. But Amory made sure that this one was a soft fork to give his side the advantage. This is the advantage that the SegWit side had back in August of 2017 versus the miners who had a much larger percentage, but they had the disadvantage. And that's actually where BCH was born. Was they knew that they had this disadvantage, so they created a hard fork version so that they wouldn't have this wipeout attack possibility which would always be there with BCH. By creating BCH, they SegWit could overcome it, and then they would have a wipeout attack. So BCH was created originally for that purpose, and Amory is using it now on the other side. So his side is going to be the soft fork. So if there's more Bitcoin ABC than BCHN, then it should go to Bitcoin ABC. The problem here is that they have a 10 block rule, which says that you can't reorganize more than 10 blocks. So there's no wipeout of larger than 10 blocks, which means that they're going to split and it's going to be permanent anyway. So, his advantage isn't that much, and it really depends on each node. And I suspect that because of the retarded way that they did this, it's just gonna end up with BCHN being the majority. Maybe Bitcoin ABC has a small amount of mining somewhere. I'm hearing even via BTC, which has been Amory's sponsor for a long time, are now signaling BCHN. That might be a head fake. I don't know. lots of confusing things. What I do know is that there's a lot of exchanges that are like having to do a lot of engineering work as a result of this. Many of them are saying we're going to at least have BCHN. If Bitcoin ABC has enough mining power, then we'll list it. And so that seems to be what's going on, and we'll see. At this point, if you're doing anything with Bitcoin Cash, you're basically, like kind of marrying someone that's been divorced 3 times, like in a really
Well,
nasty
there's
way.
lots of there are lots of people are doing something with their BCash. They're selling it because once again, for like the 5th or 8th week in a row, it is hitting all-time lows against Bitcoin, which is really impressive. It's not often you get to say that something is hitting all-time lows, especially in the crypto space where most garbage starts out as worthless, goes up. So it's very difficult to go to worthless. But we are actually able to claim that this nonsense is hitting all-time lows for the 5th week in a row. And it's only going to get worse. I am dying to see the next milestone of going under 0.01, which in my mind would make it Fcash. I keep dropping the letters in front every time we go down. So going below 0.01, which is below 1%, that's when we can start calling it Fcash. And at what point is Roger going to throw in the towel? Like, what do you think is the measuring? Like at this point, every time I see him with that sticker saying another business, usually in the middle of nowhere, where people aren't really educated about crypto, are now being convinced to accept BCash. And I'm like, wow, he's just only like ruining people's lives by convincing them to use something like BCash.
Yeah, he's I don't know when, like, his ego is large enough that I wouldn't be surprised if he just sort of goes down with the ship. There are a bunch of BCH people that have more or less done that, right? Like they went down with the BCH ship. You don't hear from them ever. Like they're not even active on the BCH forums or anything like that. They know they lost, and they will snipe at Bitcoin if they get a chance, but they're not really pro BCH either. They just sort of like fade into the background. I suspect that that's going to happen to a lot of these people that have left Bitcoin for, quote unquote greener pastures and altcoins or whatever. It's just sort of a really sad story. It's too bad, but yeah, their bad decisions will come to haunt them, and that's how it should be.
Yeah, well, that's Saifedean's famous quote: "Play stupid games, win stupid prizes."
Lots of stupid games and lots of stupid prizes.
Hey, I want to give a shout out to Zender, someone that I've actually met in person in my travels. We said this on this show over a month ago when PayPal announced they were going to allow you to buy a basket full of stupid along with your Bitcoin on their site. And he actually tweeted it out. I've been meaning to tweet out something similar. I think this is great. If you are from the USA, I'm not going to say where he's from, and have PayPal, buy one BCash coin, and after the 15th, demand both forks, both coins. PayPal needs to learn what it happens. PayPal needs to learn what happens when you play stupid games with shit coins. I completely agree with this. If you have the time and the patience, and you want to, teach PayPal a lesson, please, well, maybe not please, but feel free to buy a BCash on PayPal and then harass their customer support to give you 2 of them. And maybe then they'll learn something. Just one more thing, because I thought of it, I should have preempted this. So when I was writing this article, I was looking everywhere for this one reference, and I could not find it, but I found it later. Was it mining? It was nodes here. I found it later. And I referenced this article that I want to pull up if I can find it. Oh, crap. All right, you know what? We're going to go down here. in my references on nodes. I'm sure I put it there as well. I'm not sure where in the article I linked it at so many references. And I really should have prepared this a little bit earlier. Nodes here by Brand 7, someone I recently got back in touch with. But this was an awesome article. She was basically a Bitcoin noob learning Bitcoin during the days of the fork. And she wrote this amazing article that nobody read because no one knew it existed. And in this article, and it relates to your BCash. So right now, some people on BCash are trying to choose which side of the fork they should be on, just like we had to choose which side of the fork we were going to be on. And this is a logic from someone that was totally new to Bitcoin. And I do want to point it out and read it because it's not long. So here it is. As a user, your interest will be best served if you choose to exclusively give value to the version of Bitcoin that you perceive as the real Bitcoin. Remember, you can do this by exclusively accepting that particular version as valid payment. As an author of this post, I can only speak for myself. The following is a train of thought that represents my personal perception of the real Bitcoin. This was published before the Bitcoin user-activated soft fork, by the way. Bitcoin is a technology. Bitcoin, the money, cannot be separated from Bitcoin, the technology. They are the same. The value I have invested in Bitcoin is therefore an investment in a specific technology. All sorts of technologies are dependent on maintenance. To perform maintenance, there must be maintainers. My investment in this technology is therefore also an investment in the maintainers of this technology. My perception of the real Bitcoin is the one that is supported by the most qualified maintainers. As most qualified, I regard those who have the highest probability of success in enabling the continued survival of Bitcoin with the most important properties intact. In my view, the most important property of Bitcoin is to be a censorship-resistant store of value that can be held and transferred without reliance on a trusted third party. By enforcing the consensus rules with my own validating node, I will exclusively accept a valid payment, the version of Bitcoin that my perception of the real Bitcoin. Okay, this was an absolute awesome article. It is referenced in my article on decentralization. It was written by someone who, she's only written like 4 articles, and that was it. That was the extent of Brand's Bitcoin career, pretty much. And her prior article was basically setting up a miner. And there it is. And big fan of ours back in the day, Jimmy. Definitely helped understand all of it. And she was very interested. And she wrote a couple of articles. Not a big part of the Bitcoin space anymore. You know, life goes on, but it's great. And that's the logical thinking. So before you assume that Roger Vere's fork has more hash power, now that Amarissa Shea is gone, who is the developer of Roger's coin? Who is left? Who's the maintainers?
Well, it's everybody else that isn't Emery. I think they had like 3 or 4, and they're the ones that are doing BCHN. So, I mean, who cares, right? Like, this is a completely irrelevant fork, and nobody cares at all about what BCH is doing. And, you know, they like to think that they're actually making a difference or doing something that actually, you know, matters, but they don't matter. And that's what the market is telling them with, you know, almost getting below 1.5% at this point.
So speaking of irrelevant forks, can we just briefly talk about their prior, more irrelevant fork of BSV? And that one is less than 1% of Bitcoin, and they have no security whatsoever. Just a quick statement.
Yeah, so essentially they remove pay to script hash, which is all the addresses starting with a 3 on Bitcoin. They decided to remove pay to script hash, except remember, pay to script hash was how you did multisig. So they needed another way to do multisig. They created something called accumulator signatures. And put it into their hard fork. Except that it didn't work. They had a bug in it, which with a multi-sig, it should be greater than or equal to the number of signatures that are, it has to be greater than or equal to, say, 3 of 5 or something like that. So you could have 3, 4, or 5 signatures, and any of those would be fine. Instead, what they did was less than or equal. So you could have 0 signatures on a 3 of 5, and it would go through. And not surprisingly, a lot of multi-sig funds got stolen. And this is what Greg Maxwell is pointing out in this post, talking about what happened here and how a bunch of money is now gone, and all these people that were, counting on it. Yeah, it's pretty sad, actually. But, I mean, that's play stupid games, win stupid prizes.
You can't make this shit up. I'm just curious what the price of BSV is, if anyone's still keeping track of that thing. BSV.
It's under 1%, so it's got to be under $160 or something.
I guess Bitfinex is our.
Yeah, that's fine. Yeah, they had it from the beginning.
And they're not even at the all-time low yet, so BCash is doing worse. I mean, the value of BSV is lower than the value of BCash, but it's not at its all-time low. The all-time low came in May of 2019, so still have more time to get there. Man, this is so insane. But let's move on to Bitcoin. Oh, sorry, another shitcoin, Grin. This is so all 3 Mimblewimble coins, Grin, Bean, and what's the other one? Mimblewimble coin have all had ridiculous security flaws where shit just stops functioning.
Yeah, and that's a common theme of all coins in general. The fact of the matter is we're not paying enough attention to what's happening. I'm sure there's more than what we've covered on this show. Believe it or not, we only cover a small percentage of all the vulnerabilities that happen.
Guys, it's worse. It's worse. It's always worse. When people say, you haven't read the white paper, you haven't looked at what's really going on, the more we look, the worse it is. Always. Not once have we looked deeper and realized that it's better. It's always been worse.
This is true. And that's the sad reality. And that it just sort of speaks to the quality of the programmers and developers and QA processes and all that on these other coins. They just kind of suck.
All right. Enough shitcoin talk. Let's talk Bitcoin. We're going to start with a Lightning update, and then we're going to go on to the mining update. So we have Lightning pools it's a special Lightning pool is open for business where you can lease liquidity, earn returns, and stack sats. Ryan Gentry, whose name sounds very familiar. Was he on our halving stream?
He might have been. Yeah.
I think so.
He's based out of here. I know that much.
Today, we're announcing the release of Lightning Pool, a non-custodial peer-to-peer marketplace for Lightning node operators to buy and sell channels. Lightning Pool makes it easier to instantly accept Lightning payments and opens up the new possibility of earning a yield on Bitcoin by selling access to liquidity on Lightning. I can go on reading, but I'll just hand it off to Jimmy to explain it to us.
Yeah, essentially, the thing about Lightning that's kind of difficult is getting inbound liquidity, and this is a problem everywhere. If you can kind of think of it as sort of like a line of credit. You have to lock up Bitcoins in order to be in a Lightning channel. If you want somebody to pay you, you need somebody to lock up their Bitcoins to you. And that can be a problem because that's a lot of Bitcoin that you can't do anything else with. So what Lightning Pool is, it's a marketplace for inbound liquidity. So you can buy or lease, liquidity in towards you from different businesses. And the idea is by putting a price on that inbound liquidity, you're able to go and get, various, channels open to you. And if you're doing a lot of business, if you're a merchant or something like that, getting that inbound liquidity is absolutely critical. And having that ability to, get a lot of money, quickly because you might be selling a lot of stuff. That's what this is all about. So yeah, they now have a marketplace for that, which is important to make the system robust. I expect that the market will find some good prices for these things, and compared to the on-chain fees that we're expecting for this next round of bull market, it should be relatively cheaper still, and that's the idea.
All right, and so I do see a question from the audience that says Grin is actually just a proof of concept, Tone. It's not supposed to be an investment. Bullshit. Okay, proofs of concept are not valuable. They're not currencies. That is complete and utter bullshit. No, Grin was invented for one reason only: for the guy that took the Mimblewimble code and decided to promote it to print his own money. And this is what separates these projects in the Lightning space from scams like Grin, because this does not create its own money. This does not create its own Bitcoin. And you can still earn some Satoshis from being one of these liquidity providers in an honest way, unlike any of these shitcoins.
Yeah, and that's like Grin is basically, if you didn't think it was an investment, lots of other people did, including large hedge funds that leased out tons of hashing power so they can go and grab the early Grin. It turned out to be a complete nothing burger. All those places probably lost a lot of money, but that's how it goes sometimes when you get more hype than substance.
All right, so here's another article from Bitcoin Magazine. It's not really, I read through it. It's not really, it's just more of an explanation article on the different types of nodes, and just pointing out that in places where Bitcoin is probably most important as a store of value and as a medium of exchange, those are the places where the knowledge and the tools and the expertise to validate your own transaction with a full node are very, very limited. So it does explain the difference between running a full node and validating your own transactions versus, SPV light clients on your cell phone. Jimmy, you read through this. Anything you want to add?
I think you got most of it. It's there are lots of considerations from a design perspective, but we do want people to run full nodes and so on. So it's important that we figure a lot of this stuff out. I wouldn't worry too much about it unless you happen to be a developer that's working on it. But there are lots of ways in which this is being sort of made more accessible. There are tons of devices that you can buy now to essentially run your own node without you having to think about it very much. And those devices are continuing to get better. Nodal is one, MyNode BTC, I think Casa Node is another.
Start9 is another. They're friends of mine, so I'm gonna.
There's a lot of different ones. So, and I expect more of them to come out. So, I mean, these are more the technical considerations for all of these things. So, yeah, it's pretty good.
The only other thing I'm gonna say is, look, running your own node and validating your own transaction is important, but I also understand that it's not the simplest thing in the world. And you may not have the time or too busy for it. But at one point or another, if you run a business and you're selling something, especially online, you want to accept Bitcoin payments. And if you have a shop online and you are accepting your own Bitcoin payments, put in the investment. Either you probably have a web developer or hire, a web developer that is somewhat trusted, but trust can also be a little minimized here. You want a developer that will integrate BTC Pay Server with your own node on your own server. So if you have your own website, if you have your own business, you're selling products online, invest the money, have your own server, have your own developer put BTC Pay Server on top of your own server so you can accept Bitcoin transactions. Your server will have plenty of space to host a full validating node. You may not, in your day-to-day little transactions of buying a cup of coffee with Lightning, you may not really care about validating your own transaction. But in your business online, and this goes for all businesses, this is what you should do. BTC Pay Server also has CoinJoin technology in it. So you can do that as well. You can help out the Bitcoin network by making Bitcoin more fungible, validating all those transactions through your own server, through your own node on your own server through BTC Pay Server without reliance on any third parties. You just need the right web developer to pull it off. And that's my recommendation. I'm sure Jimmy will correct on anything I just said.
Yeah, I think you're going to want to do something like that. For merchants, I think you're going to need like beefier hardware than what's on this one. But I mean, those products are coming too. I think BTC Pay Server will have some sort of product eventually where you can just have a point of sale kind of thing for any sort of web kind of thing, and it'll be configurable and so on. But yeah, it's this is how it goes, and yeah, I look forward to how the space develops.
All right, so we're moving on to our last topic, which is the Bitcoin mining landscape. While everyone was thought mining was going to die when the price of Bitcoin was around $3,000 to $5,000, now it looks like the complete opposite. So our first story is Russian energy giant and Plus sets up Bitcoin mining farm via joint ventures with BitRiver. I'm not familiar with the work of BitRiver, but it's just a headline. We're not going to dig into this headline. It's just a headline saying that Russia is getting more, or at least companies in Russia are getting more serious about global competitive mining. In the meantime, at the end of October, just 2 weeks ago, Bitcoin hash rate drops over 10% as Chinese miners migrate fossil fuel plants. It was such a weird story when it broke. Bitcoin is on the verge of breaking out. Bitcoin has just gone from a $4,000 price in March, and at the end of September, we're hovering around 12, probably 13K. I can look at it exactly, but we're definitely way above $10,000. And suddenly 10% of Bitcoin mining hash rate drops. And that is very, very confusing. And I don't understand why. And somehow Bitcoin has been around for 11 years. And now, all of a sudden, the fact that Chinese miners migrate for the winter like birds is all of a sudden a big story that I didn't even know existed before. So that's a little weird. But in any case, hash rate is back. Chinese miners go somewhere else, wet season, dry season, I don't know, cheaper electricity, certain parts of the year, certain parts of China. Great. They have actual freedom of movement, apparently, something we don't have in this country anymore or anywhere else. But the Chinese miners seem to be able to move around China, no problem. So again, a big nothing burger probably as mining continues to go on. This is going to be the real story. Any comment on the Chinese migration of miners and Russia getting into the game, Jimmy?
Well, so the Russia getting into the game, I mean, they always like sort of do that. That's like proof of press release. It's not really anything else other than that. With respect to China, the wet season helps all those hydroelectric dams have excess capacity, and that's what the Chinese miners take advantage of. But once the wet season is over, their contracts end, and they don't have access to the super cheap power that they would otherwise. So that's why they move over back to, I guess, closer to Inner Mongolia or something like that, where they can get cheap electricity again, just not as cheap as the hydroelectric dam. So it's a business decision, and that's why you get like sort of fluctuations, because it depends on where the energy is, and that's what we should expect going forward. Is that wherever the cheap energy is, that's where the miners are going to go, because they are mobile. Whereas like other electricity usages are not really that mobile. And it's kind of a unique new thing in the energy industry where you you can profitably use up energy, wherever it is, and it's very portable. It'll have an impact going forward in ways that we don't really foresee right now.
All right, so now let's move on to the actual big controversial story for the day, and that is DMG's subsidiary Blockseer launches Bitcoin mining pool focused on good governance, auditability, and OFAC compliance. I forgot what the acronym stands for, but I'm sure it has something to do with money laundering and AML KYC laws and everything else that is totally not only unconstitutional, but also just straight up immoral. But let me digress on my views on AML KYC laws. It's coming out of Canada. Oh, what a surprise. That's probably the most socialist country in the Northern Hemisphere. The American Hemisphere. Okay, DMG Blockchain Solutions Inc., a diversified blockchain and technology company, is pleased to announce the launch of the new North American-based Bitcoin mining pool from its USA subsidiary company Blockseer. So here is the relevant part. All users of Blockseer's pool are required to pass KYC, Know Your Customer protocols, and blocks posted to the Bitcoin blockchain by Blockseer's pool will only contain filtered transactions using Blockseer and wallet scores labeling data, along with verified sources such as the United States OFAC blacklist for crypto. Jimmy, tell us how this company will be filing for bankruptcy very, very soon.
If only. Basically, these guys are a mining pool, and they're going to filter transactions. And the idea there is that they're not going to allow in transactions which are have addresses that are banned by OFAC, which is like a regulatory compliance place in the US. A lot of exchanges already do this. If it comes from a particular address, then they just sort of don't allow it or report it to the U.S. government or something. This is the cost of regulatory, things that you have to do whenever you're touching this stuff. So essentially, they're going to do it at the block level instead of at the exchange level, and that kind of sucks because there's essentially financial censorship going on there, but they're not the only pool, and these transactions might have more fees in them. So with respect to your question about how they're going to lose money, well, essentially they're not going to be as profitable as somebody that's not complying. So you can be a miner pretty much anywhere. So if you're in a country that's not following OFAC or whatever, then you can mine these very profitable transactions where these guys are not. And as more halvings come in and so on, these guys are going to need they're not going to be competitive, so they'll either go down or they'll have to get subsidized by the government. Either way, they're not going to be as competitive. So mining's a razor thin margin business. You can't afford to not include a transaction just because of things like that. But regardless, like the effectiveness of just banning particular addresses, if you use an HD wallet, it's that in itself is going to make it more difficult anyway. And once you try to expand that, like it gets very, very difficult. If it's like 2 hops away or something, then you're going to have too wide a net. There's a lot of issues here.
Yeah, and of course they could beg the government for a subsidy to make up for the difference. This is what BCash did during the fork of BSV. They were basically subsidizing their Bitcoin miners from their pool because they took the hash rate and they just subsidized. So that could happen as well. So a lot of people are panicking over this. This article was just sent to me just before we went live. And it's one person's incredibly long, detailed view of how the future of Bitcoin is dead, because this is the beginning of the end of how every transaction is going to be censored. And while I did not read this entire thing, I would just like to point this person to our 3 previous articles of Russia mining and China mining. And I'm sure those pools care a hell of a lot about the US blockchain blacklist.
Yep. Yeah. And that's the thing. Anyone can mine it. Like, just because one pool is doing something, I mean, once you get, like, they're trying to find choke points. The thing is, like, pools are not great choke points because you can switch pools anytime you want. There's no vendor locking. And you get paid in Bitcoin, so it's not like they're going to be able to figure out who you are and like ban you from mining or something. So I mean, it's kind of a ridiculous kind of thing that they're doing. They're trying to be regulatorily compliant, but it's not going to be effective.
All right. So on that note, that wraps up our stories. And Jimmy, how are the books going? Are you seeing a pickup in the sales of the Little Bitcoin book?
Well, unfortunately, I get data like that. That's like 3 months old. I don't get like sales data right away. But it does seem to be doing better, and there's a lot more reviews more recently, so I suspect that it's doing better. Andreas told me that your book sales are going to follow Bitcoin price, and if that's the case, I'm expecting more sales. But yeah, we'll
our
see
views
exactly
are. I think we've doubled the number of views on this show from a few weeks ago or a month ago. So yeah, it's coming.
Yeah, and that's a good thing. All of us have been waiting for this Bitcoin bull market for about 3 years now, right? Like, so it's going to take some time, but it'll happen.
Yep. And Jimmy, of course, also has the Programming Bitcoin book. Any workshops in the near future? No, you're like me.
But this book did get translated into Japanese, and it's available in Japan if you're in Japan, and you can learn how to program Bitcoin using that book.
Cool. All right. And mempool, probably should have done that before the book, but it's empty. Jimmy, for you.
So if you want to click on the 1 month graph, you can
it was bad. It was bad.
It was really bad for about a week there.
It was bad.
But now it's basically cleared. Usually when you have weekends, it clears a lot of stuff. And we're heading into the weekend. We barely have 5 megabytes worth in the mempool right now. It's going to continue to get better. The China mining stuff probably affected it a little bit. I mean, like, look at that. Like, you can get in on 2 blocks from now for 8 sats per byte. Yep. And if you're willing to wait an hour, you could probably get in for like 1 sat per byte. So it's ridiculously cheap right now. And if you're consolidating or something, then I would go do it. Like that. This is the time to do it.
Yep. Every single 1 sat transaction should clear this upcoming weekend. Yeah, and this is incredible, because if you remember what happened, if I go, well, you obviously remember what happened back in 2017. I'm actually going to go to Willie's site, Woobull, 1 second, charts.woobull.com, because he had this one, let me see here, Bitcoin SegWit adoption, Bitcoin network throughput. It was one of these. I actually asked him to make this chart for me. Here it is. And so this is SegWit, his SegWit adoption chart. And the blue line is the transaction fee. And when Bitcoin was approximately the same price as it is now, the transaction fee was through the roof back in 2017. Our transaction fee did get a little bit high once again more recently. So it's the right scale in dollars. So this is a transaction fee of, and it got a little higher than that, of like average transaction fee was over $30 right here. The average transaction fee a few weeks ago was around probably around $8. We're now back down to $1 or $2, but remember, that's the average, and this is going to drop. It's probably on a little bit of a delay. So we are in way better shape. It's 3 years down the line. And just the other day, I don't know why I was thinking this. I don't know how it came up, but it's like, not that I think about, if someone asked me, Tone, what do you think about wrapped Bitcoin? And my first answer is, I don't think about wrapped Bitcoin because it's stupid. So I don't think about it much. But if you just watch us earlier today when we described, the only value add to wrapped Bitcoin is that you have one more way of losing access to your Bitcoin while someone else still has access to your Bitcoin and won't give it to you. That's basically the only value add of a wrapped Bitcoin. So I was like thinking, like, what actually caused Roger to go off the rails with his view of what Bitcoin is? And let's remove the conspiracy theories, right? He's working for he's working with the government, or he wanted to rule his own coin. Let's remove those as options, and let's talk about what actually made him believe that that was the right path. And it almost has to go back to Gavin Andresen screaming as far back as 2015 that the blocks are full and it's a catastrophe and we're all going to die. This is like the global warming from 20 years ago. If we don't do something now, all of Florida will be underwater in 10 years. It's these calls for imminent catastrophe that are non-existent for decades or centuries to come. So in the case of global warming, it's probably centuries. In the case of Bitcoin, closer to decades. And it's the same thing we're now hearing about quantum computers. Once again, I'm being messaged about, should we fear quantum computers? And I'm like, no, maybe in a decade. It's not and that's what caused me to think that. And I think it was this fear that some people are putting out there that you have to do something now, and you end up doing something very stupid. Meanwhile, you do have an unreasonable amount of time to solve the problem, and the smartest people are solving the problem. Just give them time and relax. Your thoughts on anything I just said, Jimmy?
Yeah, I mean, I honestly, I think for Roger, it was more about his ego and his sort of being marginalized in this space, because he's always thought that he was the reason for Bitcoin's success. And at that cruise, he said, I'm the reason why Bitcoin is where it is today, and I'm going to do it again with Bitcoin Cash. That's sort of his mentality, is that he needs to be important in wherever he is, and that's, I think, why he went off and did what he did. But I mean, regardless, I don't think he's important, and I don't think he's going to matter for. I mean, I'm sure he still has some Bitcoin, so he'll matter in that way. But as a policymaker, or as anyone that's as a person of influence in Bitcoin, he's only going to ever be just the villain. I can't see him doing anything that will matter in any way, because there are people that are way better than he is on marketing. There's a lot more technical people than him. There's a lot of people that are richer than him that are doing things for Bitcoin. So I don't think he matters at all.
Getting a lot of questions about BlockFi. Look, I'm not a BlockFi expert, and people are saying, is BlockFi legit? Here is my definition of legit. Do they have a shitcoin? There's just a simple, what do you call those, flow charts. Does your crypto company have a shitcoin? If the answer is no, we can discuss your company as potentially being legit. Because if the answer is yes, you are not legit, it's over. Like, there's no discussion. You're done, you're scamming, you're garbage. So if you don't have a shitcoin, we can now talk about being legit. Now, the next question you want to ask when it comes to BlockFi, let's assume BlockFi doesn't have a shitcoin. I don't know if they do. I don't think they do. Let's assume that they don't. If BlockFi doesn't have a shitcoin, then the question that you want to ask is, are they running a scam? Like, is it a Ponzi scheme? Is it an MLM scheme? Are they Is it open source code involved? Is there oversight? Are they being regulated by something? Some kind of some kind of check on them. I'm not saying that you need government oversight, but something that would hold them accountable if they run away with your Bitcoin. So if they pass that test, the reputational test in some form, now we can talk about whether their product is actually innovative or useful or anything. And I believe BlockFi would pass the first, no shitcoin, and it would probably pass the second. They're a legit company, not some money multi-level marketing scheme like BitClub out of God knows where. So they'll pass the first two, but I will question the third, whether they're innovative or needed. But that part, I would need to read a lot more about them. I'm not interested in BlockFi. I'm not interested in their services. I don't recommend their services to anyone. There are other ways to borrow money. So they're not for me, but they may be for others. So now we're up to that debatable part. So that's my view of BlockFi.
Yeah, there's some questions about whether they're solvent. They're giving fairly large interest rate in terms of Bitcoin. So, I mean, basically they're a custodian. To me, they're kind of like an exchange, and you want to be very careful with those because they can take your Bitcoin. And yeah, I don't know if they're solvent or not. They haven't put in any sort of proof of reserves or proof of liabilities. So I would just kind of stay away unless you know something I don't. But yeah.
Right. Not having a shitcoin is just, like you're doing what you're supposed to be doing. Now, how are you doing it? So it's, we shouldn't give credit to people for doing the right thing. You did the right thing. And so it looks like Jimmy could potentially be questioning that second layer, whether they're running an up and up company without the shitcoin. Now, if they are, then you want to debate whether their services are actually useful and valid. And I don't know enough about that, so I just stay away from it.
Yeah, same here.
Okay, so price. By the way, this week might be the last week we talk about the Bitcoin hyperwave, because it could finally be invalidated by going above the close of 6,125. That was that second highest weekly close. The second highest weekly close was in phase 6. If we can close above that, hyperwave becomes invalidated. Let's look at the weekly chart. The weekly chart remains very bullish. The price of Bitcoin right now is 16,158. We are a smidge off the highs just a few hours ago, maybe 8 hours ago or 12 hours ago, whatever. And this is still a bullish looking week. I would love to see the high come in next week or the week after. So the weekly is still bullish, but as of Sunday night, there will be an orange arrow right here telling you that the MRI is on a warning sign with the actual MRI top coming in the last week of November. So I am looking for a top sometime late November, early December. But right now, the weekly chart remains fully bullish. The daily chart has also gone bullish the moment we broke above the triangle. I got back into a bullish trade right here at around 15,550, 15,600. Right as we were breaking the triangle, when we got off the show 2 days ago, I logged into my broker and I picked up more GBTC, which I had sold at a slightly lower price at 15,300. Now, the Bitcoin that I sold at 15,300, I bought all the way back there. Some of it was bought back there. I added to it somewhere over here. And it was really funny to see comments on my video saying, haha, Tone is such a great trader. He sold at 15,300 and then had to buy back at a higher price. Yeah, welcome to profitable trading. That's exactly how it works. So sold here. It did not pull back to my buy point. I bought back in. I trusted the triangle. I still trust the triangle. I believe we are going to go higher here over the next week or two, or at least a few days, I do think that we will break above 16,500 here. I don't see anything in this chart that it's causing me concern that we are ready to go down. Of course, I can now set my break-even stop loss. We have gone up more than what I was initially risking. So if I was a short-term trader, I would put in my break-even stop loss. I am not a short-term trader. I will hold on to this position, waiting for an exit closer to 18,000 at this point, sometime over the next few weeks. And if we do go down and we get that pullback, I am ready to go way harder on my Bitcoin position in that $12,500 range. I still believe that is the pullback target. That would still be my pullback target even at 18. Maybe I'll raise it up to 13 and a half. Right now, my pullback target is still 12 and a half, but I do believe that we are going to go higher in the short term. The daily is bullish, the weekly is bullish, the funding rate is not concerning, so still plenty of room to the upside here. If I go to a lower level time frame of this is the 1 hour. Interesting how the 1 hour tops on the MRI top. We have seen the 1 hour be very successful with the MRI. Here it missed the top by 1 hour. And here was a beautiful buying opportunity, though this candle would have certainly gave you concern. The 1 hour funding rate is also favoring the bulls. Everything is favoring the bulls. We are holding the support line. That's a beautiful reversal candle off the support line. Yes, this was an MRI top. Would have loved to see an MRI bottom here, but it wasn't. I am bullish at the moment, even on the 1 hour chart. It is not very concerning. I love this pullback. It literally came in exactly to the breakout level where I called for the buying opportunity a few days ago as we were breaking out. And on a 4 hour chart, that is a bullish looking candle as well. CMF's positive. The funding rate is starting to favor the bulls again. I'm pretty bullish here across all time frames. I guess that means it's probably going to go down, but I am bullish. I am holding on to my bullish trades. Now, in the traditional markets, we have lots of concerns. Here is gold. Not sure why the MRI is not working. Gold's popping a little bit. I am not interested in gold until we get back above 1925. Until then, I'm going to just stay patient and watch and see what's going on. In the traditional markets, we have an MRI top. However, yes, this is an MRI top on the S&P, but this is not the kind of environment that is conducive to a big reversal. This is a much better environment. See, when you're rising into the MRI, granted the MRI was off by one candle, but when you consolidate for 1, 2, 3, 4, 5 days, granted this was a little weird, but you can chalk that up to the election Monday on November 9th. That's the Monday following the election when all the fraud was starting to get exposed. This consolidation at a new all-time high is more like this situation here. You see where you have a rise and then a consolidation into an MRI top. That is more conducive to more upside. And then the second MRI top did not have a consolidation at the end, and it was more likely to pull back. We saw it again right here. You go up, and now you're consolidating, though not as much as you did here, but you are consolidating around the MRI, and you're consolidating even the candle after. And then you continue to consolidate, and then you go higher. Here is another example. This is more of a rise. A candle like this, I am significantly more bearish. Doesn't mean that that trade would have worked out. But then this one, I'm not bullish at all. I'm also very bearish because of how high it's rising. So it's just an example that consolidations into an MRI are not as toppy as other types of MRI tops. So just keep that in mind when we discuss it. And I don't really want to look at stocks. That's about it for me on the price stuff. GBTC premium is in the 16 range, which means it's fine. There's no FOMO. I mean, this is FOMO. Look, GBTC premium 40%. That's FOMO. This is not. So, which is another reason why I'm bullish and why I don't mind holding a bunch of GBTC, because if there is a pop to 18,000 and that pop is very, very brisk, not only will you profit like 10% from GBTC, the GBTC premium can pop to 40% from 16, and that's an additional 20% profit just from the premium. So the 16% premium is it's in the middle. It's not on the high side or low side. You really want to be picking up GBTC here when the premium is 6%, which is kind of what I did. When I saw that premium go to 6%, that was a good time for me to buy it. All right. That's it, unless Jimmy's got questions.
When moon?
Well, your definition of moon, I think the top's coming without breaking the all-time high this year, somewhere between 17 and 18K. Then we're
then we pull back, and then we hit a new all-time high next year.
Everything is pointing to a new all-time high, and I can't believe I'm saying it, Q1 of next year is very likely for a new all-time high, which is like a year earlier than I expected it if you asked me a year or 2 years ago.
Wow. Well, we'll see. Can you get like a quarterly chart or something like that, not a yearly?
Oh, speaking of which, yeah, that's a good point. People pointed out on a monthly chart. So this is my general monthly chart, and the monthly chart is on an MRI warning, but on a monthly scale, we really like looking at Heikin-Ashi charts because they're just so much cleaner. And in the last bull market, we had 3 consecutive monthly MRI tops with a top on the third. That was the $20,000 top. We then bottomed with the MRI buy signal, and this is why Heikin-Ashis are so great. We also bottomed right here on the MRI, and if it wasn't for this one candle, I believe this one,
July of 2013.
Yeah, we also topped on the MRI here, and I'm trying to figure out why there was no top on the MRI here. There was one candle here that messed it up. I think it was this one. So 1, 2, 3, 4, 5, 6, 7, 8, and 9. Literally one candle broke the count right here. It was this candle here. The August candle broke the count. So this was literally just a few dollars away from being a second consecutive MRI top. It was just off by a close on a monthly scale by very, very little. So the MRI has been incredibly accurate on the Heikin-Ashi charts. Gave you the buy right at the low in December of 2018, and it's given us the first sell signal, which will happen as of December coming up. And in the last bull market, like I said, we had 3 MRI tops in a row before the eventual top, and these are monthly candles. So I'm expecting this to pull us back a little bit for a few months, but then we can set off on another one of these runs on the monthly MRI. And this is the non-Heikin-Ashi version. Heikin-Ashi just kind of averages things out. So
how about quarterly? Can you look at the quarterly?
Yep. That would be 3-month chart.
Yeah.
And on the quarterly, we also topped on the first on a single MRI top. We did the same thing here in 2013. We topped on a quarterly MRI top in 2017, and we're just getting the ball rolling. It is just getting started. So
6 more quarters after this one, huh?
Yep. You got 6 more quarters to go before a potential top. And I wouldn't be surprised. It's a year and a half. I wouldn't be surprised.
Wow.
Looks good.
Yeah.
Looks good.
2022 is when it looks like it'll top. Awesome.
Yeah. I mean, look, if you're gonna be selling your HODL, make sure you're selling it for something worth it. Because there's no reason to sell out of fear. If you're selling to upgrade your standard of living. That's it.
Which isn't a terrible thing to do.
Yeah, yeah. Some of us could only drive, the car is getting 13 years old. It's in 3 months. I can no longer say I drive a 12-year-old car. It's now a 13-year-old car. So eventually, gotta buy a new one.
There you go.
You can only be broke for so long,
Yeah. All right. I think that's it for me.
That's it for me as well. Hey guys, if you want to support, just read the article. Go to ToneVays.com, check out the blog section. Other than that, we have a free Learn Trading section. We have a non-free, more advanced, on-demand educational video section, and the affiliate codes. Check those out. If you're looking to stack some sats, you have LVL and you have Swan. Thank you so much for watching, and we will see you all on the next one. I usually take the weekends off, but we'll see what the price does tomorrow, and maybe I'll come on for some Q&A.